John Authers from the Financial Times. I'm the investment editor there. This panel is going to be looking at what we've described for the conference as the global commodity crunch, which is shorthand for the phenomenon that the world lived through last year of a sudden and very extreme rise in a wide range of different commodity prices. As we know, that led to social unrest in various countries where food became difficult to afford. It also led to fears of stagflation, given the remarkable increase in the price of oil, and it redoubled efforts to look for ways of making it economic to pursue alternatives that didn't create such a drain on the world's resources. Normally, if anything, oil and stock markets are inversely correlated. A rise in the oil price will be bad for stock markets and vice versa. In the last couple of years, we've had a very bizarre series of events where they have moved almost perfectly in tandem, rising together, crashing together, and rising again.
On the oil issue, I do agree that it is not a question of supply or demand, but of both. What's intriguing, what one can glean from what happened in 2007, 2008, is that there's clearly, in any sort of foreseeable, meaningful future, more than sufficient oil reserves globally to be extracted to meet even vastly increased demand at a cost. And in some sense, that cost will climb and climb and climb as demand climbs and climbs and climbs, so that many of the recent discoveries of vast reserves are only feasible when oil is in excess of $80, $90, $100 a barrel. You take what may be a system in equilibrium, whereby people are producing just about enough at a price point that they can make money on, that system can very easily be thrown out of whack in ways that can be hugely disruptive in terms of price and very volatile. And my expectation would be that what we've seen over the past couple of years is the new normal for what we're going to be seeing for the next several decades.
We have seen a very interesting time, and the linkages between the markets, I think, is one of the most important facts, and John alluded to that. We have never seen something like that before, where the food markets, the fuel markets, and the financial markets are so interlinked. The problem, of course, is that has had a severe impact on the vulnerable populations in the world. We have seen an increase in the number of hungry people, and we expect more than 1 billion people to be hungry this year, and it is partly attributable to the high food prices and the global recession. I do think that the food market is a little bit different, though. The rice market in particular is so peculiar. Only 6% of the world's rice production is traded on international markets. There's almost no future trading. There's a little bit. But if you have 2 billion people who are dependent on rice, and there was a panic in the market, traders were talking about $1,500 a metric ton at one point in May last year. Technology and biotechnology really allows a significant improvement in yields even in the coming years, and creating seeds that are more resistant towards drought and excess water, which will be associated with climate change.
What keeps me up at night is thinking of that chart for India and for China. These countries that emit a fraction of what we do. When we put out 25 tons of carbon per person, and they put out 1, 2, maybe 6 tons per person. And their aspirations are to become like Americans in terms of what they consume, which means that they don't want to be denied the opportunity to become more economically viable, to have what Americans have, which is comfort, and to send their kids to school and to realize their own economic dreams.
I'm not preaching that market mechanisms left to their own, exert sort of wonderful palliative effect. I'm simply saying that the inexorable pressure of prices spurs action in a way that politics is simply unable to deal with, and certainly in a global coordinated fashion that there is no political system to deal with. So I don't view this, and I don't think we ought to view this, price spike impending world as a negative that we will suffer from. If anything, it may be in fact be the only thing that forces action in the directions that all of us and so many around the world believe is absolutely essential.
China in particular, I think, has become very much aware of the environmental constraints to their growth. Beijing is a city where it's hard to breathe, and they tried to clean it up before the Olympics, and they tried to keep it there after that. So there is, I really think there's a lot of possibility, but we need to give the right policy frameworks and the right incentives to do that.
The problem in this country is that there was a terrible planning mistake made in the 1940s and 50s in the era of the GI Bill, where the idea was you had the car, you had the space, use the cars to expand out into that space, and then leave yourself with this terribly energy-intensive mode of being. So the cities in this country that grew up at that point were big, sprawling, and required cars, didn't have mass transit, didn't have public transport. China and India arguably still have the chance not to make that mistake, although from my limited knowledge of some of those cities, it already looks as though they may be falling into those errors. But the idea is not to fall into the mistake that America made in the 50s without even realizing it was making it.